welcome back to episode 3 of the season 5 Quiddity Property Education podcast. Today, I'm joined by my very good friend, Chirag Amin, who is also, incidentally, a Quiddity Wealth customer.
How did that happen?
How did that happen? Exactly. So that's what we're going to find out today.
And why did it take so long?
and he's still asking for discount, by the way. This is still the bit that we haven't gone over. So today, you're going to help the listeners understand why you went with Quiddity Wealth, and more importantly, what were you kind of thinking about, and also your experience about it. So, but before we get into that, I want to just set the scene around what Quiddity Wealth is for listeners. So, Quiddity Wealth now is all about helping people like Chirag, people like some of our customers that we're working with, where they are cash rich, time poor. They want to build a life raft with property investment, but they haven't got the time, the ability, or quite frankly, the desire to learn about title split and all that kind of good thing that I love, but quite frankly, not many people like it. So Quiddity Wealth has been put together so that we can help investors deploy their capital into properties like blocks of flats where we can recycle most of the capital, not all, most of the capital to reuse again to buy the next block. But ultimately, we are doing the end-to-end service for them, finding the block, negotiating, buying, refurbishing, title splitting, refinancing, and in the end, even parking it to a managing agent to do all the managing. So that's what Quiddity Wealth is, and that's what Chirag has been one of our customers to, and we're going to talk through his experience of. So before we get into that, though, Chirag,
That's the podcast done, right?
That's like 10 minutes done.
You just say that, and then like, do you want to do it?
Yeah, do you want to do it or not?
Yeah, I don't have any more questions. Is it safe?
Am I going to lose all my money?
My money going to disappear? You going to run off?
Yes, well, like your dad used to say, don't trust this guy, don't trust this guy.
It's like, you mean you're going to give it to... Who is he? Like, how do you know him? Oh, we met skiing 15 years ago.
15 years ago.
Like,
and now you're going to give this guy £50,000. Are you joking?
You're an idiot. I can't believe I raised you.
So, okay, but before we get into your dad stuff, so tell me a little bit more about, so it's important because, look, you're not an idiot. That's the truth be told. You are one of my cleverest friends. But I want to, give you 3 minutes to give a bit of a background, because if I give you 20 minutes, you'll take 20 minutes to talk about yourself.
Yeah.
So let's give you 3 minutes to say, okay, so what's your experience in terms of investment? What kind of goals? And more importantly, you've got some really good, you've got a good educational background and corporate background. So tell us a bit more about that and how you've ended up working with me with Quiddity Wealth.
Okay, so in a nutshell, my career has been corporate and running commercial businesses. So I worked for a large multinational company. They were very good to me, my family. They moved us around the world. They paid for MBAs. And so, I ended up running large businesses for them So
he's been modest. He was a country manager for a big billion-dollar company in multiple countries in Asia. So that's the level of kind of intellect, but also drive this guy has.
Yeah, and well, thank you for all that. But the context is important because I think that, as someone that runs businesses, I'm not shy of running a business.
Yeah.
And so, we've been friends for a very long time. I've seen you do what you do. What you do is not simple, but there is an option that exists for me to think about setting it up myself.
Yeah.
So why would I do that, or why would I not do that? And we can come on to that in some of the questions. But my point was more that, I understand the complexities of running a business. I know where I would put my time and my energy, and what you do is complex, right? And in my thinking, whilst I understand the returns are good, there's always an alternative. And so for me, being overseas, not necessarily being in control of the property environment myself, or not being up to date with the property environment, I was always a little bit kind of hesitant to move it
because the alternative here for the listeners, you're talking about you can invest in S&P 500
exactly
and all the asset classes.
Yeah, exactly that. So and I did that. So and also the mechanism is important. So do you invest yourself, or do you work with a portfolio manager that invests your money for you? Yeah. And my belief in all these things, and I've whether it's S&P 500 stocks or property or anything else, crypto, anything else. Yeah. For me, as a person that isn't doing that full time, there is someone that is smarter, more focused, and understands the environment better than I do. Yeah. So I am willing to pay a bit of a premium, not too much, because I keep talking about discount. that I'm willing to pay a premium for the knowledge and the expertise.
Yeah.
So my investment or my capital management has always been placed with experts.
Yeah.
But for me, the biggest change was, environmentally, the markets have shifted, so the returns in that space have been more limited. They're still good and reasonable, but they're not guaranteed.
So why did you choose Quiddity Wealth, the service that we provide? So in terms of, how much capital did you have to deploy? We spoke earlier on in a different episode about you selling your personal name held property. So if you've missed that, guys, go back to that episode and listen to why he basically repatriated almost £1 million worth of capital from different properties to redeploy into title splitting, buying blocks of flats. So where were you at in terms of capital mindset when you were selling this thing, and what are you trying to achieve goal wise?
Yeah, I mean, again, like just to ensure that I don't get hated on, but repatriating £1 million of capital is all leveraged.
Yes.
So I went in years and years and years ago.
Yeah.
In my personal property.
Yeah.
I then refinanced that up to the eyeballs. So I never had the money to, so to speak. I was always like, here's the rent, or here's the property, because it's my property. I'm going to remortgage so now my repayments are like up to my eyeballs. Yeah. But I will take that and I'll plug it into another flat somewhere. Yeah. When that grew a little bit in value, I then remortgaged that up to the eyeballs and then put it somewhere else. So I was never, the value grew because the market grew.
Correct.
What then happened was the market stagnated over a period of time. So again, when I think about what is my money doing for me, plus the the taxation issues, our mate George. 2017, right? The rules changed. So whatever I was making on that, and we're not talking about much, because again, I'm up to the eyeballs in terms of and
the interest rates start to creep up after COVID. Yeah.
And I'm in most of the properties I had, I was topping up. So that was all okay.
Yeah.
Because I think, again, in the long term, that'll solve itself.
So the plan was at that time, like all of us, to be fair, you were refinancing, buy more, but wait for 25 years. And maybe those properties would have gone up in value. You then sell 2 or 3 of them, pay the rest of them. And that, to be fair, that's the game plan that most people, and I will bet my life on it, that people who listen today will be doing the same thing.
It's exactly that. And the point was, it didn't look like that was going to be viable for the future. And the big change for me was kind of coming back from Japan. I was living there before, but moving back to the UK in one of these jobs that you were describing before, on a PAYE, which means that now I'm paying whatever my base tax
50%,
was.
let's call it.
Well, 50%.
Yeah.
So now I'm paying 50% on the rent that comes in on these properties.
Because this was a personal house.
Because it's in my name.
Yeah.
And now all of a sudden I've gone from topping up each one for a couple £100 a month to now
minus.
Well, now I'm like $3,000 deep before, on even a couple of them, right? So this was turning into like half of my salary was going to disappear in terms of just keeping these properties alive, and that's not going to work. So I don't know if it's the same or it will be the same for all listeners, but there was a very shock realization. Like, this can sometimes creep, and like you don't really notice these changes too much.
Yeah.
But for me,
because you've got an income coming in, this is a supplementary £200, £300 you were getting on the side,
and
which was still okay.
Yeah, you could kind of you could. It could be absorbed, or it can move slowly. But for me, there's sort of a shock from not being in the country to coming into the country, or coming back to the country. And seeing such a stark difference motivated me to make. But
I also think the challenge was, when you're buying one house and one dwelling, you've got £200-300 on that one dwelling. The challenge is, once that starts to ebb away, and in your case with the high taxation, lots of people are selling because they are in minus figures. So you then sell. So just to kind of go on today, so you sell your properties. You then say, okay, well, I've got capital here. What do I do with it? So you can do the crypto, the S&P 500. But the challenge is finding this passive income that where, it's not about waiting 25 years to make the money. It's about how do you make money today so that you can replace your salary and then you have a bit of a better life now rather than in 25 years.
Well, I mean, I think there's a well, you'll know the background, but my initial view on this was, all right, I'm going to come back to the UK. There's enough capital here for me to actually wash my hands of work, so to speak, for a period of time. So if I put enough money in savings pot to be able to live off for 12 months or 18 months, almost like a redundancy payment that I paid to myself. And then with the remaining capital, just set up the business. And I benefit from your experience, your expertise.
So the business here being, you start to invest yourself in properties to start to do it yourself.
Be a mentee.
Yeah,
right.
It's correct.
Effectively that. So you hold my hand through the process.
Yes.
You walk me through the deals. You help me to source, not necessarily source. That wasn't where we were at, but we moved to it.
Yes.
But it would be, I'll set this all up.
Yeah.
To then, and this is always rose tinted, right? So even though we talk about the long and the short of it, warts and all, about how challenging the business can be sometimes, from the outside in, I'm like, okay, well, it's, in terms of business model, relatively straightforward, but it comes with complexity.
Yeah. So that here, basically at that point where he was coming back and I was saying to him, look, why don't you come and do this and I'll help you. So teach him, basically. He's a friend of mine, teach him how to do it. And he does it himself. But now we move forward to, where do you move from? So trying to do it yourself, and why now have you now, obviously fast forward to Quiddity Wealth?
I mean, for me, it was the realization that I didn't have the inclination to do it.
Yeah.
It is an option, but then in any moment in time, you've got to evaluate what works for you in terms of both your time, your lifestyle, your deployment. And I just didn't want to walk too far back from my lifestyle.
Yeah.
So I'm okay for this to be built in the background, as we've discussed, and I'm sure some of your listeners will be thinking the same thing. Yeah. At some point, it may be a decision in the future for me to say, okay, I'm going to step away from a corporate job or any kind of like fixed income to something that's generated by the property business.
Yes.
But I didn't want to take the ding on life in advance of that. So run these two things in parallel. But to do that, now I sacrifice my time. I don't have the time because I am working full time. So then it was more about what options exist. And so now you go back into standard patterns of investment, which is, I've got a lump of cash. Do I stick it in with a property investor who's going to take their 2%, 3%, whatever it is, inconsistent or at-risk returns, which is true for all investments, but certainly the environment for stocks and the market, the S&P 500 or others, has been unpredictable, although it's on a bull at the moment, versus an asset class that I know and I understand. Like, I'm from the UK. I get houses. I get the market.
Yes.
I just don't have the time to be able to do it. But luckily, you were evolving your business model at that point in time to start bringing into to play this whole wealth white glove service effectively. Like, here's the cash. I'll invest it for you. You don't necessarily need to. You don't need to hunt, but you do have a choice of deals, and you kind of put that in front. So here are your options. Which do you want to go for?
Yes.
And that was probably the only bit that, again, you guided me through that process and how you think about it. But what I loved about it was, if you didn't put the deal in front of me or any of your mentees or anyone else in your portfolio, you'd buy it yourself.
Correct. And I think that's true to be fair. Everything that we present to investors, friends, and everybody else, if nobody buys it, I'll buy it myself, because I would not put a deal together for somebody that I wouldn't pay for myself. And that's one of the things that I would always say. If you're thinking about, you've got capital tied up, you've got capital sitting in the bank making 3%. How many people do I speak to on a weekly basis? They got 300 grand, 100 grand sitting in the bank doing nothing, making 3% return. Here, you're investing in an asset class that's actually going to be income producing on entry. So straight away, you start to add value to your life, as well as the value grows up with the asset as you go forward as well. So just to kind of give the listeners an example of what we've bought for you is a block of 5 flats. And what was the purchase price? I think it was 475.
475.
Okay, 475. And just to fast forward 6 months down the line, we're now refinancing. We've done the title split.
If you look at my face, I was like, oh man, he's testing me on this one. This is how hands off I was. I was like, all right, well, here's the cash. You tell me how I'm going to get the most return out of it. And at some point, I'd phone you up and be like, was it 4 bedrooms?
Or 5 bedrooms?
Is it 5 bedrooms?
So that's how hands off it has been, right? So in terms of refinance now, we're at the point where we're getting the revaluation done. We're somewhere around 750 on the refinance. So £750,000 for a purchase price of 475 gets you all your money pretty much back out.
And
with an income.
The numbers tell a story, right? The numbers say this is a no-brainer. But, all these things are illustrations until it becomes a reality. So we're at the point where it's real today. But to go into this, you need to have a bit of an open mind that the numbers could flex a little bit. I was willing and more than happy to go with a conservative illustration on this one, and I think you need to going into an investment like this because you don't categorically know. But for me, it was extremely de-risked because you were managing it.
Yes.
And again, like, you don't know until you
It's a
get
bit
in.
of trust here because you have the trust because you know me. So my question then is,
Yeah.
what would give other people confidence that doesn't know me, doesn't know Quiddity Wealth?
I mean, I think that my dad's reaction is normal. Like, this guy, we mean you're giving this guy your money. Like, how do you know him? Like, what's this? So I think it's a very reasonable question. I think trust is about a couple of. I think there's a couple of things that build trust.
Yeah.
Credibility based on evidence.
Yeah.
That you are following through on what you say.
Yeah.
And I think you're an interesting one because you don't hide anything.
No.
Your deals are transparent to a fault. I think sometimes you got burnt a couple of times, right? With just how open you've been about like the deals themselves. But there's people trying to take advantage of you. That's what I mean by that. But you're extremely transparent about it. If I wanted to independently verify, you can check purchase histories, company's house. You can check all that.
And I always say that to people, do not invest with anybody or go and learn with anybody unless somebody's doing the thing that they say they're teaching you.
100%.
Company's House is a very, very easy way to just Google or Company's House, Quiddity Group, see what's there. Because I think that matters, right?
And that's the kind of thing where, whilst I wasn't sitting there with my dad showing him Company's House reports.
Yeah.
The reality is this: you're my friend, and it's easy to fall into a trap of like blind trust at that point. But you have choices to make, and this is these are significant lumps of capital. So, am I going with a tried and trusted investment house with my capital, or am I going to go with my friend?
Yeah.
And so, unfortunately for you,
I went with you.
There was even more scrutiny on what you do and how you do it.
Yes.
Because of the base of friendship. Because I don't want anything to get in the way of that.
100%.
Right? So how can we be clean, and how do I know that this stands up by itself from a business perspective, from a clean lines perspective?
Yeah.
And I think that the friendship element of things could blur that. So, knowing that it was contractually put together, that the illustrations were transparent, that the evidence base of your experience in the same kind of areas.
Also, we shared you the valuation reports
Exactly.
and all that stuff.
Yeah, exactly.
All the kind of the market data that you would expect to get, right?
Yeah, and ultimately, and then you kind of go back to the alternative, right?
Yeah.
Which is, you've given me all this stuff. If my alternative is to work with a Hargreaves Lansdowne or something like that, who's that guy? Yeah. I don't know who he is.
Yeah,
So
yeah.
at the end of the day,
It's a
faceless organization that is opaque at best of times as to where the assets are or where the capital is being placed under what asset category. Then you get your report at the end of the year or the beginning of the year, and you can set up a profile. But after that, you're hands off anyway.
Yeah.
So
you don't have much kind of say as to what's being invested and where it's being invested.
Whereas this is a real thing. Like it's a block of flats. Okay. It makes sense.
You can actually tangibly see it, and you're getting, more importantly for me, it's getting that income coming in each month. That also reinforces it works. I'm getting £1,000, £2,000, whatever the value is. Okay, we've got to wrap this up. So I've got a few quick fire questions for you. So, what is the biggest fear about investing? Well, before you invested, what did you have? One thing that you were fearing?
I think is this the right deal? I didn't have any questions about what I was investing in or the format. Like it needed to be properties, and I wanted to go down the hands off.
30 seconds, Chirag. What was the answer?
When you interrupt me, that's another 5 seconds of my 30. I'm going to expect that to be added back.
So biggest fear before investing?
Hesitancy that it was going to be the right deal for me.
For that specific deal.
One
Word to describe your experience so far with Quiddity Wealth.
Smooth.
Trust or returns? What mattered more?
I trust you'll get me a return.
So a bit of both. That's a good answer. Active investing or hands-off investing?
Hands-off.
What would you prefer now?
Hands off.
Hands off. So you still want the money, and you're happy to pay a bit of a service fee for that.
Pay for the service. Take the returns. I'll take a hit on the returns because I don't want to touch it.
Fine. What nearly stopped you from doing it, if there was one?
Glass.
Glass?
In my renovation.
Because your renovation was costing tens of thousands of
way
pounds.
more than I
You were
expected.
running out of money.
That was the hesitancy. Like I had other things that I needed to cover.
Okay. And the last one, if you didn't do with this, what would you have done instead with that money?
I'm back to my Monzo plug, man. That was returning me at the time. It was 4.5%.
Yeah.
So chuck the lump of cash in the bank, and that's going to be all right. But the alternative would have been into stocks.
But look at it now. 4.5% is what, down to 3%.
3.25.
So you know the asset classes at one point doesn't produce, whereas the rent keeps going up all the time.
Yeah.
So it's
it wouldn't have been
inflation-linked.
Bitcoin. That's rolling the dice. I wouldn't have done that.
No. Okay. My last thing is, what would you say to somebody who's unsure about Quiddity Wealth?
Do your homework. Quiddity Wealth is a premium service.
Yeah.
And you need to be comfortable that your capital is being deployed the right way, and you can trust them. So, there's multiple case studies that you can find, or contact Azid or his team, and they'll share them directly with you.
Yeah.
But make informed decisions on that. But know that there are many people that are benefiting from the service that has been provided here. I think just do your homework. But I think you'll come to the same conclusion as I did, which is under intense scrutiny, this stacks up.
Amazing. Chirag, thank you so much for taking the time today. As much as you're a friend of mine, you're also a customer of ours.
You're kicking me out.
It is, we've got the next guest lined up, so we will be kicking you out. But thank you so much for making the time and effort. And no doubt, we've already got you another Quiddity Wealth deal that's going through right now. So we will be speaking about that deal
discount.
at not at a discount, but at the next podcast episode, we will be having you over. So thank you so much, and I will see you in the next one.
Pleasure.
Take care.